Good morning, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. So, if you guys were here last week, you knew that I was expecting a little one. Well, the little one is officially here. Kip arrived on Friday, so any of you parents out there or people that know people that have children, you know what the first 5 days is like. It's fun, not a lot of sleep, a little congested. So if I sound a little bit weird, it is still me. And if I start zoning out, maybe I've fallen asleep because the baby's not crying. So you guys know how that goes. But no, he's actually doing really, really well. We just got back from his doctor's appointment. All is good. So a lot of you sent emails and things like that. I really, really appreciate it. Mom and baby are both doing great. And he's already, like, I would say, on the advanced side. He's like, he lifts his head already after like 5 days. It's kind of crazy. I don't know, something about COVID babies. They're saying that they're built stronger. No idea. But yep, he's here. So I'll do my best to get through the charts today. Not that I think I want to, fall asleep on you guys, but like I said, you get that little bit of fuzziness in there. But there were some pretty decent levels that we hit yesterday, and then today there's some setups. And again, I want to make sure that you guys are set up for the rest of the week. So before we go too deeply into it, those either new here, you may say, "Who's this baby? What are you talking about?" So I run a company called Keep Trading Simple. And I've been trading since about the 1999, kind of 2000 tech bubble time frame. Not a 12th generation trader. I was kind of an at-home slash kind of like school of hard knocks education as far as trading goes. Started with stocks, traditional options, found Forex, learned how to trade futures, became an advisor for one of the big three companies. And yeah, learn from the inside what it was like. And I realized very, very fast that a lot of the supposed experts out there are really not as expert as you think. Realized that my true passion was really in helping people do it themselves. What I realized, not only my own trading, but in working with students over the years, you can never trade somebody else's strategy. You always have to make it your own in some sense of the matter. And that's what I realized, that a lot of these experts are giving you things and trying to tell you that there's tools, and it's not for you, it's for them. And you need to create your own stuff. So that's what I do. I've been doing these presentations for Nadex now for like 4 years, I think. 4 years seems like a really long time, but I will say I've done education summits for them. I've done analysis sessions for them. We've done strategy sessions with them before. I helped gave feedback on like the new platforms when they come out. One of the things I like about Nadex so much is the fact that it takes some of the best things that we have from the traditional options environment and fills a hole that we don't actually have in the traditional options environment, particularly with currencies. So got a lot of different things we can trade. We'll cover a lot today. Now I have to get a new family picture. It's funny. I'll tell you guys a quick little how funny kids are. So this picture was taken, I think Jin was one. Jin is the girl that my wife Melissa's holding. Now we have a new boy, Kip. The two boys in that picture are 11, so this is a couple years older. It's funny, since COVID happened, I just grew a beard like many, I think 95% of the male population grew a beard during COVID. Well, I'm 45, so mine has a lot of white in it, and I cut it off last week. Just with like the new baby coming, I was like, all right, I'm gonna be like super grungy. Let me just cut it off, right? And so Jin was gonna look at me funny. She's like, "Daddy, where did your white go?" And white is what she calls my beard. So I was like, "Thanks for making me feel old, little girl." So and then she told me yesterday, she's like, "Daddy, your white is back." I was like, "My beard is back?" "Yes, thank you." So yeah, so I got to update that picture. But before we dive into charts, let me make sure we cover the Nadex risk disclaimer for today. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Now, none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. And Nadex is subject to U.S. regulatory oversight by the CFTC. For those of you that didn't know, Nadex is a registered trademark of the IG Group. Do you know when cryptocurrency trading will begin on Nadex? Jackson, that's a great question. Todd is listening, so I'll have Todd make sure he answers that question. I know it's over on the demo side. I'm not sure when the actual official launch date is going to be. I'm not on the demo
I'll
side
chime in
that
real
much.
quickly. We do have it on demo, and it's going to be there for a while. We're still working out some of the kinks. Clearly, you see that the charts are not populating at the moment. So we are working through some technical issues. It might be some time, but at least we've got it in demo for people to start practicing, and we're working on it. So there you have it.
Thank you, Todd. And Todd, is the plan still to have the three offerings, Bitcoin, Ethereum, and Litecoin? Is that still the plan?
I mean, that's what we've got on the radar for the moment, but we'll see how it all manifests when we eventually are able to get it up there and have it be a good, vibrant, and fair market.
Okay, cool. Jackson, hopefully that answers your question. And I guess we'll move on. So, all right, here we go. First things first today, let's go through the agenda and we're going to cover the upcoming news events. You guys know I absolutely love news events. A lot of people ask me, like, you have 4 kids, you coach, how the heck do you have any time to do this? Pretty easy. I use technology. There's no reason, I don't find any reason to stand here for 18 hours and stare at charts. It's not fun, it's not enjoyable, and it's not necessary. But one of the things I do like a lot is that I can look at the calendar on the weekend, and I can even look at it weeks in advance and tell you when the hottest times of the market are going to be. Every single week, I can tell you. 95% of the time, right? Because there's always that one unplanned speech or something that happens that you just can't plan for. But for the most part, 95% of the time, you can plan your entire week out based, on a Saturday or Sunday of when the largest amounts of movements are going to be. So we're going to cover that and kind of see what's best. Obviously, last week being the first week, I had to have a discussion with Kip that said, "Hey, listen, buddy, you're here on your first day and you come in on non-farm Friday. Like, what are you doing to me here?" But yeah, that's the way it works. There'll be one next month and one after that and the month after that. So, missing one is not the end of the world. But every single week you can plan your week based off of these news events. After that, what we'll do is we'll break down indices. Just a little bit of disclaimer here as well. Obviously, indice trading and doing analysis during lunchtime is always a little bit more difficult. So again, we'll kind of review what we saw this morning. It wasn't really a lot of movement today. It seems like the market's been timid the last 2 days. Actually, before we started, I saw there was a post talk. Somebody mentioned the stagflation word. I was like, what? What are you talking about, stagflation? So we'll cover the indices and we'll look for levels that are potential reversals for tomorrow morning. We'll cover the Forex market, a little bit slow today. Not surprised. After non-farm, you typically have a couple of days of just trying to figure out what's going on. That market is probably about to get fast and furious in about another month, and we do have some raising. And then we have commodities. Commodities have been, when I say commodities, the energies, oil and natural gas, have been like all over the place. They're crazy. Gold and silver have been kind of lost. Been kind of an interesting time for those two metals. Silver been a little bit more volatile than gold, but gold really hasn't quite seen the really drive higher that many people expected it will be. Now, again, it seems like the Fed is holding firm with this transient inflation. I haven't seen it. I don't think I don't think our prices are going to go any lower at this point. Everybody's so used to paying gas prices and food prices at this point. Something really should be done by this, thus far. But right now, if nothing is done, if they're convinced that magically everything is going to go on sale and inflation is going to go backwards, which again, I believe that it won't, this is something we're going to hear a lot of next year. By next year, what I mean is basically the election time. The higher inflation runs, the harder it hurts the less fortunate income-wise. And if they're going to do absolutely nothing about it, a lot of those votes will swing over because absolutely nothing was done for the people that need it the most. It's great that the current political stances, let's just tax the heck out of the rich to pay for things, but that doesn't help the people that are struggling the most right now. Paying $3, $4, God forbid, it goes to $5 a gallon for gas, but you guys get what I'm kind of saying. So commodities is definitely something, and tomorrow's a very important day. It's the oil inventory report. Obviously, we don't have the API numbers yet, but again, week after week after week, we've been giving you guys the oil setup. Okay. All right. Oh, not holding it to a ballpark. Yeah, I don't know. It's always funny, Jackson, when you ask someone like, when it's gonna, when something is in beta, you're like, when's it coming out? I mean, you guys know that, I also do like my video games as well. I actually had a mentor session recently and somebody was like, hey, did that video game you were waiting for come out? Yeah, there was one from Amazon that I was looking for. Amazon does everything. If you guys don't, if you guys are not betting on Jeff Bezos, that's you're missing out. But now they have ventured into video gaming and the billions of dollars that he can make in that field. And that game was delayed, months and months and months and months and months and months. So there's delays everywhere. All right, so whoops, I don't need this one. I need this one right there. Yep, there we go. All right, so today, October 12th. First things first, getting kind of a lay of the land right now. You can see that the currency market overnight, looking at this 24-hour pip change, not really a whole lot going on, right? 30 is the big one here. Actually, 34 is the dollar Swiss, and you can see it's reversing back again. So all of these are well within one daily ATR, the average movement per day. So I wouldn't say, in the mornings we break down what's hot for the day. Currencies are not really hot, but when you're looking at what economic news releases we had today, none of these is considered high impact or particularly anything really crazy. I would say the biggest thing to look for over here is the economic sentiment in Europe. That's kind of interesting. And again, you're seeing that the euro dollar's down 30. Pound yen's up a little bit. Euro pound down a little bit, but kind of retracing back again. So obviously not the ideal situation, right? But at the end of the day, I wouldn't say it's anything crazy. And then all of a sudden, the JOLTS data that came in, and again, I don't really follow JOLTS often. It's considered a medium impact. Came in less than expected as well, but there was a revision higher before. So we'll see. 11:15, we did have an FOMC member speak, and there's a flavor of stagflation right now. Kind of like, really? Do you buy anything right now? Yeah, I don't know. I'm kind of like, really? Of all things, you throw stagflation? Sure. And then again, we'll have a bond auction. So going into tomorrow actually has some pretty decent news releases. First things first, the CPI. Now remember, CPI is supposed to be transitory. Inflation is supposed to be transitory, right? Well, CPI month over month is supposed to hold firm, which again is not transitory. And the core CPI is actually supposed to go higher. Again, I feel like some speechwriter put transitory in there and refuses to take it out and doesn't actually understand what it means. Still showing that we're going higher, but yet, we're talking about stagflation on the other side. So that's at 8:30 tomorrow morning. That I'll actually be on before Todd and I speak. Could be a trading opportunity for oil. I'm sorry, not oil, for gold. Then we have G20 meetings. We all know that the latest kind of big, kind of agreements of things has always been around that global tax. So we'll see if anything more comes out of that. I do know right now that I guess it was the IMF I saw yesterday lowered the global growth rating because of basically the vaccines are not in, like third world and smaller countries. The United States is going for 3, 4, 5 vaccines. And, again, it's not being shipped to some nations at all yet. And they said that's what's going to be the delay and the drag on global growth. So we'll see how the G20 wants to handle that. I don't know if we'll get many headlines tomorrow, but you never know. There could be something in there. Just make sure that you're protected. Now, we do have FOMC meeting notes tomorrow. We have Bernard and we have Brown speaking as well. FOMC meeting notes should be kind of interesting to kind of see. Remember, taper is here. We're kind of starting the taper. The question of how fast is important. Now, under normal circumstances, Bernard is not necessarily the biggest of FOMC speakers. Not the most vocal, but she's in a very interesting situation right now. There's a lot of, now it's the way politics is now. If you want somebody out, you dig far enough back, you could find something. Powell is now, I saw it yesterday, embroiled in controversy again because high-ranking, Fed members are placing trades in the market. My kind of take on that is, so what? Congress does it. If the Fed can't do it, or if the Fed can do it, why can't Congress do it? Is kind of what my thinking is, or vice versa. If Congress is able to do it, i.e., Nancy and Nancy's husband, who's a well-known trader with that $1 million position in Tesla, why couldn't the Fed? Like, I don't know why that would be controversy. I don't think it's the best practice, but if you're gonna be mad at one person, you're mad at somebody else. And basically, Bernard is the one that has been kind of not tapped, but a lot of people think that she will be the next candidate based off the administration. She is the kind of the, lack of a better word, like the big digital dollar queen, right? Which again, I think is some good progress that we need. Is she the most qualified? I don't know, but again, she is the one that many people think will take over. So anytime she speaks, again, it's kind of nice to start trying to figure out kind of what she believes is the correct environment or correct approach. So again, although it's marked as medium, could be a little bit higher than that. And again, I don't think Bowman is as big. Now, tomorrow night we have unemployment and the employment change for the Aussie. Those are absolutely amazing trade setups. As you can see, the unemployment change, they're losing some jobs, not that much, and the unemployment rate is going up. Remember, the unemployment rate is not something you really should focus on right now. It looks like an absolutely, oh my God, it's getting worse. Aussie going straight down. Not really. Remember, the unemployment rate only tracks people for a year. If you were looking for a job and you've been out of work for a year, it does not count you anymore. We just saw that data with the U.S. It's great; they can pat themselves on the back that the unemployment rate down. But how many people stopped working last year for COVID, and some people have not gone back? And we saw the labor participation rate go down, which proves it. So yeah, so be careful about them. But the employment changed. Um, Again, expected to be negative. If it is less negative at all, it's considered positive. You'll see a pop in the Aussie. And again, at night, those are absolutely amazing trade setups. So again, tomorrow night, 8:30 p.m. Eastern time, great setup. Going into Thursday, right? Thursday the 14th, PPI. And again, this is the purchaser index, another gauge of inflation. And again, this one is showing it's going down a little bit, right? 0.6 and 0.5. But again, transitory means whatever goes up should come back again, right? That rubber banding effect. Being at 0.7 and then dropping to 0.6 is not transitory. That just means that it's not going up as fast, but it's still going up. It's not transitory. Look up transitory if you don't believe me. And then we have the unemployment claims. Then we have crude oil at 11. Again, holiday yesterday. So again, actually, I guess I was wrong. Again, I forgot because I didn't work yesterday. I forgot that, yeah, Columbus Day yesterday. So Thursday this week is crude oil, not tomorrow, but we will see some market movement tomorrow morning, probably in the European session. It was a surplus last time, so even though oil's at 80, whatever it is, again we have a surplus, we have extra, but yet supposedly there's a greater need for it. And then Barkin speaking, and then going into Friday, we have retail sales. Now, retail sales is one of the top 3 biggest kind of important factors. It kind of shows us what happens going forward. What's interesting about this release is that the core is lower, right? The month over month core is lower, but still positive, and yet the regular, just general overall retail sales is coming in as negative. What that does is that kind of opens us up to a positive. If we, because it is already listed as negative, if they are a little bit too negative and that number comes, even if it comes in at 0, right? 0 is not great, right? That there's no change, but it's better than what the forecast was. That could be a big push up for the dollar as well as the overall indices for the day. So again, could lead us into a very strong Friday if the numbers kind of roll out correctly. Now, preliminary U of M consumer sentiment, always important. And again, that's supposed to be positive, right? When the consumer is positive, they tend to spend more money, which is interesting that the consumer sentiment number is higher, right? And there's supposed to be an adjustment, but yet the retail sales number is down. They're kind of going back and forth there, right? But typically when you see a confident consumer, they spend more money. And you see it roll over into retail sales. And that rolls over into earnings. And when earnings are better, the indices go up and we roll from there. So it's all basically interrelated. All right, with that said, I don't think there's anything this weekend. I guess, yeah, New Zealand has some data, CPI coming in, as well as Chinese data, which will affect the Aussie on Sunday night. I don't know if many of you guys or girls are actually looking at Sunday nights, but again, it's kind of a proxy. You can trade the Chinese market. A lot of people are like, how would you do that? There's ways to do it. If you can, obviously Nadex has other indices on there as well, so you can go check that out. New Zealand, you're not trading directly, but again, you could trade that through the Aussie. Remember, New Zealand raised their interest rates last week. They have their first country to do it. So again, that does carry over a bit into the Aussie realm. All right. Let's see. Let's start up here. We'll start with the indices. Actually, let's start off with the VIX first. All right, so you may be wondering why I'm looking at the VIX. You may ask me, how the heck are we trading the VIX? Why do I care about this? Well, the VIX is a volatility kind of gauge of the overall market. When the VIX is going down, the markets tend to go up, right? When the VIX is going higher, meaning there's increased volatility, the markets are going down. People are not anxious when the markets are going up. People are very, very anxious when the markets are going down. So as we can see, this is one of those foreshadowing. We marked it off before. This is an area. Actually, yesterday morning, I guess when Todd and I were talking, we mentioned how we had pushed up into an area of sellers. And again, can you trade the VIX with traditional options? Yeah. With Nadex, no, you can't. But again, we saw it push down. And today we kind of ran right back up to that area. And again, the overnight kind of gave us that same type of setup. But you can see the VIX is down 4.5 and all the indices are up a little bit. And again, it's exactly how you expect things to look. So kind of like how we use the dollar index, use the VIX in kind of the same sense. All right. Now, looking across at the ES, you can see that, for the most part, I mean, we bring it back again, we're kind of in a channel, and we kind of had a little bit of a channel here, and then we kind of popped up into that 4,400, and we started channeling again. And now, yesterday kind of sent this to the downside. And early this morning, and I was like marking this off, here's the European session open. And you may say, well, why do I care about the European session? Well, because they have a lot of play and they determine what happens. There's the European session, and we kind of pushed up, pulled back down again, and then again, sitting right here was kind of our more or less our open. Now, we all talk about how to trade this at the open. And again, remember, the open is a very kind of, I don't want to say aggressive, but I'm going to say it's a faster, more volatile, not angry. And again, it's hard because we say the open, but there's already futures traders in the market trading. So it's not actually the open. It's kind of like the stock open, not the futures open. Anyway, if you're looking at this, you can see that we had a level of basing sitting right there. With price pulling up at 830, and again, kind of peaking right up here, it was more set up for some kind of a short-term trade at the open. So with it dropping for the first 30 minutes, really 15 minutes, not really surprised at that reaction. Since that time, it's really started to level and put buyers back in again. Now, what's interesting about where we are now, there's not really any news today. Again, not a lot of news. The VIX starts to come back down again because there's not a lot of really not a lot of drama out there. This tends to go higher. Now, big question is, if we refine this level just a little bit, will this be an area where we start to roll around? Like, will this give us something this afternoon at that 1 o'clock, 1:30 time frame? Is it going to help drop us to the downside? And the answer is maybe. I mean, it's an area where sellers have come in. It was a nice little push away. It was later at night. And then really since that time, it really hasn't done much. So without any catalyst, I would say there's probably a small trade. If this was morning again, yeah, I'd be looking to take a short out of it. But right now, again, is the 1 o'clock kind of lunchtime over as good as the morning? Not really. It's not as good. It's not bad, but it's not as good. But just go ahead and watch it. For tomorrow morning, I would watch out for this 4,400. I know it says 43.99.75, and again, it's close. You can round up depending on the arbitrage between your broker and this one. I would say that'd be another level to watch out for. But remember, whenever you're trading indices, drop it down to the 15-minute, look for that pre-market moves. And in reality, I mean, I could even drop this a little bit lower if you want to. You can see that the open is right on that candle. So could I have looked at an area here and gotten short at the open? The answer is yes, right? Now, again, I don't want to go too small. That's why I tend to go to 15. But again, if you're looking for an area to short off of, there was a short trade entry, and you can see it's really done nothing. It's right back to the same spot as what we were then. So something small that you guys could have had for this morning, and that's why it's important to look at the lower time frames if you're going to trade at the open. At the open, as with end of day, don't forget you can also trade the shorter duration contracts, right? Why do you trade shorter duration contracts? Because you don't need as much movement to be right? If you trade dailies expecting a lot of movement in the first 30 minutes, a lot harder to do. But again, you can trade these shorter durations. It would have been a nice little trade setup. So right now, I would say it's really just more or less sideways. There's no reason why it shouldn't stay green today. If we take a little bit of a bounce off this area, won't necessarily be surprised. But as far as two areas, again, if it moves in the overnight, I'd say 4,400 and 42.67 are the two levels that I'm looking for right now. As far as kind of like overnight based trading, right now we got a lot more room to run for either of those two. And again, get in there at 8:30, start looking for these little levels of basing, and then again, there's how you set up your opening trade. NQ is kind of similar. I have a top and bottom. Now NQ did the same thing. Actually, your 9:30 candle is right there. Okay, you can see we obviously knew that there were some sellers sitting up there, right? So it was the same setup. Actually, if we want to put it there, there's the bottom of the green body. You can see that here would have been your opening trade setup. And again, I'm not going to open it up. Right there's 1 to 3. So was it a valid trade? Yep. And again, if you guys aren't familiar with opening contracts, you guys can see right there. Actually, yep, dead on. I'll mark this off. We have the 20 to the 40. So right there, there is if you were looking at something as small as like a 20-minute binary, you can see that how fast this thing can move at the open, and then basically push down and then just stops. Okay, so again, some great little setups in those morning, those quick little 15-minute, 5-minute candles. But yeah, Since that time, what have we done? Nothing. It's just rallying back up again, and it should. It should push back up. This one is up the least. The NQ is the weakest. It has been the weakest now for the last few weeks. I would say, is that area worth it again? I would say of all of them, I think this is giving us the best opportunity to get short at 14,773. It's got a little bit more room to run. Again, we only got about a half hour to an hour before really the market comes back again from lunch. Could we use an end of the day drop on that one? Yeah, we could. It's not horrible. I don't know. It's one of those things. I like trading this when the open. I'm not as much of an end of day trader with it. But again, could you trade off of it? Sure. On a purely technical basis, yeah. I mean, if this was the European Open and this was coming up and we hit there at 10:30, be all over it. But mark these down, mark those zones off. Keep them on your radar. YM, it had the same setup. You guys can see the level of basing and the big push down right there. Right, we hit it and pushed again. That's your 9:15 candle. It dropped and kind of did the same thing. There was a small level down here if you wanted to play the reversal, but I wouldn't say that it is as good. Right now, as far as YM goes, I'd say there's probably a bit of a level sitting right in here, and that would be more of a tomorrow or even maybe an end of day, but probably not. It's going off this level here. The problem with this one right now is we kind of have a level sitting. Here, I'll show you guys my kind of drama with this one, right? So where this level was over here, there's a little bit below that. There's this big, nice little chunk, and then we have this piece right here, okay? It's very hard to figure out where the buyers are actually stepping in because, again, here, higher, 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 higher. So there's a big area worth of buyers down there. So it's not necessarily the ideal place to get short. But again, there's even some actually hidden right in here as well. Right in there. So it's one of those areas, do I like it for a straight long? Not as much. Could it go lower? Yeah, but it's going to have to chunk through a little bit of stuff. It's not as clean. Like if this is just one candle up in this base, then it was like this, but green. If that was one candle up, I'd love it for a short. I think it would be absolutely amazing coming down to 33,695. Got a little bit more hiccups in that one. So again, kind of see what it is. Again, 15-minute is what you're looking for an open. If we can get up to 34,768, again, I do like how that one pushed down. But again, you can see it really clear right here. There's that basing level, right? Same level basing punch down, right, from yesterday or from, yesterday. And that's kind of what we bounce off of. I mean, right now, it's up 0.17%. So nothing super exciting. Russell. Now Russell's taken off. Now Russell, again, is always going to be the most aggressive and, pair moving. You can see this one actually came down and dropped. Same level of basing, right? We had levels of basing right here, right? Differences on this one, and again, I'll drop it down to 5 minutes. You guys can see it. You can see that the opening was right here, right? So we had a test right here. Big level of basing. There was a test. There was the open. And again, kind of the same scenario, but just in the upper direction, right? Right there. And there's 1 to 3. So you can see we hit a full, 1 to 3 risk reward ratio trade in the first 25 minutes. So again, kind of the same thinking. Again, look for levels of basing at the open, and there you go. For the Russell right now, you can see the Russell is having some hiccups, at least on the 5-minute, over in this direction. But I look for 22.58. I will bring it back up. 22.58 was really the last time, and again, you can see that it got really close, really close, really close, kept getting front run, and then just got hammered. It just collapsed away. It's an untested level. We've pushed far enough away at this point. I'd say watch out for that one. I think that's pretty decent. There'll be the actual fib traders in here trying to short. If you guys can see here. Take this off. Let's put on. You guys can see there'll be fib traders in this area if they haven't gotten stopped out already, right? Right around the 50%, 61, it just kind of banked off that 61, and there is actually a level arguably you could say that's a level right there. There is a green candle. It is not the ideal situation, but sitting right at the 61.8. No, not prices. Levels, percentages, right. You guys can see it right there. So there was probably some people that got short and got stopped out. A lot of fib traders will use the 50% and then the 61.8 as their stop loss on that one. Particularly people that are looking at this and saying, oh, look, there's basing right there. That's what Brian says we should get short. And yeah, most of the time. But remember, that would have been your profit target for the long at the open. So not so much your entry. It would have been your target. Next clean one, right, would have been after it pulled back down again, would have been up top. And that's kind of where we are right now. And you're seeing a little bit of red in that one. So wouldn't be surprised if there is a short off of this one as well for any of you afternoon-based traders. 1 to 3 would be there. So it needs to push all the way back down again. But you can see how fast that happens. And again, more shorter term trading. All right, so let's go across. Let's cover currencies. So currencies, as I said, okay. Currencies, I gotta go. I was like, wait, why does that chart look weird? There we go. So again, currencies right now, the Aussie dollar in the last 24 hours has moved 0 pips. Doesn't mean it's stayed in the same exact price. It just means that it keeps retracing back again. So we've had some up and down pushes back and forth. There's a small zone below, I would say, that watch out for a small level down here. Remember, it always makes sense to, actually, let's go back. Let's go to today. And we'll go ahead and do this. I'm going to try this and see how I like it. So this is showing you all the Aussie-based news. Basically, tomorrow night is the biggest of Aussie news. Actually, I guess for there we go. All right. So obviously G20 meetings, there's some inflation expectations. There's an annual report. And then again, IMF meetings later in the week. The biggest one obviously is going to be this 8:30 tomorrow. So what do you do with the Aussie? I'd say the Aussie's got a couple levels in here that are not bad, right? We have one a little bit lower. And again, remember the Aussie is a proxy for gold, right? So the Aussie doesn't move gold. Gold moves the Aussie. Gold is up by a little bit right now, and you can see that Aussie is up also just a little bit right now, with a lot of retracement. I will say we've had 2 touches, and it kind of pushed it a little bit deep. We may want to go a little bit farther down if we're looking for a long, but I think timing really makes a big difference here. If this can continue to push down, meaning dollar strength, when the Aussie session opens at like 6, 7 o'clock tonight, that may give us the opportunity to roll. Now, what I'm really looking for is that 8:30 tomorrow night, I think is going to be the kind of the trade of the week for the Aussie, both in the Aussie and the Aussie yen, Aussie dollar and Aussie yen. The problem with this one is really, I guess if I was going to draw like clean kind of extreme ranges, here's kind of our extreme ranges right now. Now, could it be all the way down here by tomorrow night? Sure, it could be, right? It could be. But it's about 127 pips. Something major would happen from now till then. The reality is it's probably going to bounce around and start forming new levels in here. And the way you play this is much like you play any of the other news releases or even at the open. Look to see on the 30-minute where the levels are forming. Wait for it to pull back into those levels. And in fact, here's one that's a little bit closer that's been kind of touched twice, right? That could be where we're looking for. So I would say right now, this is a kind of a near-term one. This is probably not going to hold. It's already been hit twice for tomorrow night. But I'd say 74.02, 74.26, 72.91, and 72.32. Those would be the 4 that I'd be looking for tomorrow. And again, for news, remember, you can use short duration binary contracts. You can use call spreads or potentially even knockouts. But again, be cautious with the knockouts because, again, their whipsaw risk is real, right? Binaries and call spreads, no. Knockouts have whipsaw risk. And again, this market can be a little whippy, right? Let's see, from European Open. Yeah, this one moved 40 pips up and then 40 pips back down again, right in the European session. So it happens. Now, Aussie yen. Aussie yen, you can see, is coming up. Now, you may or may not be able to see it on here. There's dotted lines, right? This area right here is marked off. This is actually, I believe this is actually a daily. Hold on. Aussie yen. No, it's a 4-hour. So we have a 4-hour zone in the Aussie yen sitting just above where we are. I am a big fan of 4-hour zones. I like 4-hour zones a lot. What I like, and again, this is a 30-minute. What I like about them is so there are a lot of players in the market. There are home-based retail traders. That's who we are, right? There are trading firms, right? There are capital groups, right? There are hedge funds. There are mutual funds. There are banks and institutions, okay? There are central banks really at the top end. Banks, banks, hedge funds, larger central banks, they're not looking at 5-minute, 30-minute, even hourly charts. The smallest that they look at excuse me, the smallest that they look at is 4 hours. Okay. So when you can see this type of buying and selling and basing on a 4-hour chart, it tends to be good. Now you may ask, how do I know that? Well, when I worked for one of those things, I also know a guy that used to trade. He used to trade for a bank. He would trade bank accounts in the UK for the bank's purposes, like to make them profit. He was a currency arbitrage specialist, and he would trade. So he's like, yeah, I would never look at anything lower than a 4-hour. So he was a guy that traded for the bank, for the bank's accounts to make the bank money, so they could have obviously hedging and profit from the currency market as well. I forget what bank it was over there. I'm totally drawing a blank, but I'm tying this one up to the baby. But yeah, he's like, don't ever look at anything. He's like, if you want true institutional stuff, don't look at anything lower than a 4-hour. This is a 4-hour level. Love it. 83.98. It's an area. Now, the other side is a little bit more difficult. This one is hard because, again, on a 4-hour basis, you can see that this one pretty much just shot straight up. So there are small pullbacks. I would say there's a little pullback level here that I'd be looking at. Here, I'd be a little bit riskier, but when you drop it down to a 30 minutes for like intraday level trading, it's not as clean. You can obviously see here where the basing was. It's kind of like, do we take this? It's all right. Do we take the level right here? It is also okay. Do I love it? No. Is it the right shape? Yes. It is about 50 pips away. Is that a good distance for like a European session open? Yeah, that's also there too. So, I mean, if you guys are looking for something, if we're able to pull back, and I guess actually in reality, it's probably better that we just mark off this zone here. And again, does this put us at risk of getting front run for the buyers that are sitting right here? The answer is yes. But at the end of the day, you always got to go a bit more conservative with it. So, I would say there's two levels there. If you're looking for more conservative, something in the overnight, I think 82, I guess it's basically at 83, right? Basically almost 83 exact. So again, a little round number action there, right? 83 would be where I'm looking for buying. And again, the nice thing about that is that tends to be where a lot of the call spreads and things like that get sucked into. So, just watch out for it. 83 and then 83.98, or even if you want to go 84 at the top, I think is the channel that the Aussie yen is looking at. Euro pound is I said I wouldn't fall asleep on you guys, but I gotta say that, yeah. I mean, it has moved 8 pips in 24 hours. Actually, can I change that to 2 days? Yeah, I can change it to 2 days. It has moved 6 pips in 2 days. You can see a lot of these other numbers are quite large. Yeah, 6 pips in 2 days. Let me switch this back. So, yeah, this one is just not moving very much right now. As you guys know, the European Central Bank, the ECB, has said that they are mixing tapering up, that their taper is going to be a little bit different. They are not tapering. They are changing their allocations to new things. What that means is they're just putting it in different areas, right? So with that said, there's not really any driving factors. G20 will help this a little bit. When are the headlines coming? Ooh, it's a little harder. Let's change this over and we'll go European. Basically G20. We got some trade balances, some French final CPI. None of these are major movers. Maybe IMF, but again, day one is not really going to be the headline day. As far as the pound goes, pound actually has some data tomorrow morning. GDP month over month. Look at that. That's a nice little jump right there. That could definitely provide what I would say more of a negative sentiment, because again, that's supposed to be overly positive. Manufacturing is good. G20 is in there. Services don't matter. And then IMF manufacturing. So this GDP month over month data actually could be pretty decent. It's an easy box right there. Yeah, it's only 28 pips. Let me see something real quick. Do I have anything? Let's see. There's a small zone there. I was trying to look on a 4-hour. I wanted to make sure we weren't running into anything major. And you can see that we have a little Harry Potter going over here. So let me go. All right, so let's move this and this. Let me see if I can find that base. All right, so this is what we're flirting with. There's a little zone here we're looking to break, and it's unfortunately it's not the cleanest. I like the 84.43, but we got to get priced down there. So let me see, where are we at in regards to that? Yeah, we're chopping through that one. So yeah, kind of the same thinking. So what I would say is a way to play this one is to play this one in kind of a Harry Potter short. Now we can actually, here's the zone that we just drew, right? And I'm going to turn this and make this really, really light in color. You guys should be able to see it, but it should be much, much lighter. When we're doing a Harry Potter, and again, this is a strategy that I've only, like, students ask me all the time. They're like, "Hey, what class is the Harry Potter in?" And the answer is it's not. It's only something I've given out with Nadex. You always got to focus on kind of the near term kind of level. Here is the near term level. So what I would say is we have a potential Harry Potter setup on this one, particularly because I do feel that that number will give the pound a boost tomorrow morning. The question is, how do we time it? And it would look something along these lines here. Now, remember that Harry Potter is a continuation-based pattern, so it needs to break through the level, it needs to base, and then it needs to pull back again. But a break of 84.71, which again, you might say, is that within reach? Could that happen tonight? Yeah, it needs to move 15 pips, which is absolutely nothing. It could absolutely, without a doubt, drop down, base, and pull back. If we can get back into that level or even a new level of basing right here, I think this could be a viable overnight short. And the reason why is because I believe that GDP news will give pound strength. So kind of like that one right now. And again, profit targets on this one are much, much lower, but you can see 1 to 3. And again, depending if you trade it with binaries or call spreads, you may not be as concerned about the actual profit target on that one. But again, I think that's a decent push to the downside. Euro yen, kind of a similar situation. You know, euro pound, we're talking about this one collapsing through. Euro yen, as you can see, is kind of sitting quite high, right? Sitting quite high on the horse here. Now, we did have a good sell level at 131.65 or 64.7. It has kind of turned and not quite made it up that high. We've been kind of stuck, and if we take top to bottom here, we're only talking about 40 pips. Hasn't been a huge mover. Here's the European session open, so it looks like they brought some strength in, and then it ran into sellers. So I would say that this one is kind of set up the same way. We have a level of basing right here, and again, it hit it, kind of hit it again, pushed it all the way deep. It's basically the same trade setup. Although the reason why we were looking at it in the euro pound is because we actually have pound data. If that one goes down, all the European currencies will take a little bit of weakness, but it's basically the same trade. I would be a bit cautious at this little level though, right here, right? That's my, I feel like I had a thing for that. Do I have a caution? I don't have one. I thought I did. I thought there was a good little caution thing in here, but I don't know. I guess I could use this. Guess I could use a little caution. Watch yourself with that little level right there. It's not that, see, but I just think I'm not confused about it, but I think we need to watch out for it. Man, I love how many symbols they have in here, but I really need to get some better symbols. They need to add some more that are like, pure trading based levels. I can't use the lightning bolt because I use that for the Harry Potter. I can't use the coffee. There's the loading icon. A star is not going to work. The YouTube icon is definitely not going to work. So I'm running out of stuff here. But anyway, that's a little level watch out for. That actually may be where the base comes off of. What we might get is a drop down, and that may be the turning point, which actually would be fine. Just make sure you get the base on it and have that one come back down to that. Okay. Again, it looks very pretty when you draw it that way. All right, euro dollar US. Now, again, we're kind of seeing dollar strength across the board. The dollar index is up slightly. So again, that's why this one is pushing down. We had a level here that we mentioned last week, 157.75. It's kind of hit it. Taking something more near term. If you're looking for a 1030 reversal based trade, there's your 1030 reversal right there into a zone, which again would have been a great short for yesterday. Today, we're kind of flirting with the buyers down here, but I would say really until we get down to this 15.22, it took a bounce off this level, but is that an area where I'd want to get long from? Not really. If anything, again, I've been more on the dollar strength, European weakness slide. So again, yesterday morning, if you would have caught this one, nice little trade setup. And again, it's a level we saw sellers, so you should have been looking for yesterday morning. Right now, this would not have been an area that I wanted to go long off of. Wait for it to bounce off 15.22. I think that gives us our best opportunity. Looking at pound yen. Pound yen is also high. Now, this is an old area here, and it was an old area of sellers, and you can see it hit it again, based in there, hit it again, dropped it. So again, not an area we're looking to get short from. I think really 155, and again, this one is so close. I miss thumbs when I move the charts. 155 is the next area of decent selling. Since the open, it really hasn't done much. You can see that this is the European session open today. Could you have traded the European session? Absolutely. It was a pullback. You had a test right here. Right, you had your little check mark right there. I feel like I should change that one to like green or something, right? I need like a color coder. Been in my next E-class, color coding Brian on TradingView. But anyway, you had a test here, and again, nice little bounce. So yes, that would have been a long opportunity because you would have expected this one to fail. And again, this is why I always got to check these things. And this is how, everybody was asked, like, how many hours a day are you doing this? It's like, you don't need to spend money. You know when a lot of the movement is going to be well in advance. And right there, look at that. So perfect trade setup, 1 to 3 before it hit a level on the other side. Again, it's obviously out now. The way that it's looking right now, it has found sellers. I do like kind of how there's a top in here, so I would expect this one to turn around and go down. And again, the UK market's open, so this is purely the yen driving this one right now. But is this a level we could take another buy off of? Potentially. It's out now. Let's see. European market is 1, 2, 3 o'clock right there. So if we get a, if we're sitting down here, whoops, I got to change it back. I didn't realize it did it for all of them. Hold on. 3 o'clock is right there. Would I be cool with that trade? Absolutely. And I already told you why, right? We have the GDP data for tomorrow. It's supposed to be positive. If this thing comes straight down from now till then, that's what you would expect it to, because again, if you want to buy, you want to get it cheaper, right? Not more expensive. So look for that to come back, 153.76. Pound dollar, it should look pretty similar, right? Looking for a price to come down. Now this one's a little bit kind of sketchier. I would say right now, let me bring this up to an hourly. So as you can see, there's a couple different levels here. This one has really been basing sideways as well. We have an area of buyers sitting down here approximately at 135.37. Now, for them to get down to that level, it needs to go about 66 pips. It could absolutely do that from now till tomorrow morning. It is a level that we've drawn, and again, it's a level that we've seen buyers come off of. We've seen it front run. Is it a viable entry to go long from? I would say yes, right? The problem with this one is when people see something like pound news, a lot of the premium gets jacked into the pound dollar automatically because the U.S. market is not open. What I would say on this one is see where the contracts print today, particularly the floor and ceilings of some of the call spreads out there. And then again, kind of see where the binaries place themselves from now till then. There's two options on this one. When one, if we kind of crash all the way down and we pull back up again, if we are here in the overnight and we pull back up before the news, then it means that the market knows what the GDP number is going to be. They were overly optimistic, it's negative, and then it's going to shoot back down again. So these are kind of your two scenarios for news, right? But if we can get something that's in this zone and it hasn't really crashed in, and it's, in the last, between, 1, 2 o'clock, hour before, hour and a half beforehand, it drives into this level, that's a go opportunity, right? That's a go opportunity. And again, especially if you can get a call spread that's a little bit out of the money to make the entry cost a little bit cheaper, those are decent trade setups as well. But right now we need some movement. We should get it because again, with that market closed, the US dollar fans can kind of do what they want. Now, Dollar CAD's been bouncing around a level. You can see that we have these green lines. It's an area where we hit and bounced, then we came back and it Harry Pottered, came back up and Harry Pottered again, and now we're bouncing off this level. Right now, this is the level we have it marked as a short, a 124.22. It is a Harry Potter based trade. Whoops, it needs to be a sell to the downside from here to here. And we need about that much movement, right? And I can scroll back and I'll show you why. Here's what the original level looked like right here. And you can see price came up, it got front run, and then bam, drove into it, and it drove it pretty deep. Did all its thing, finally came back again, and then it hit it again, and then boom, it finally hit it and broke it. So there is going to be some buyers, and again, there will be buyers probably stepping in here. And again, I'll make this solid, and let's turn this green, just so we can kind of differentiate what it looks like. People will mark that off because that was a decent push. But we know right now that if price is able to get down to there, and again, we just hit the top of that level again, if it decides to say, hey, well, you know what, those buyers, they saved it before, that's those green lines. If it takes off to here, guess what? No harm, no foul. what we're looking for is we're looking for a break. We need some type of a confirmation that this zone is officially smoked. It's gone. We need to push down. We need to base it a little bit so we could draw it. Again, if you guys really, really want to figure out, well, how do I know that it's basing enough? Draw a little triangle in there. If it goes around the triangle, right? If it goes around the triangle, oh wait, what did I just do? I'm trying to fill the whole thing in. Oh no, not this one. It's this one that I wanted. If you can draw a triangle, that's more than enough base, right? If you can see any type of triangle position in there, and looking at something along those lines. Okay. So again, if you have the trade set up and it does this, who cares? You didn't get into the trade. If you weren't in the trade, no harm, no foul, right? No trade, no foul. But wait for that kind of setup for dollar CAD. Dollar Swiss. Dollar Swiss is in a level right now. It's pushing up, and again, we talked about it before. 93. It's hit it twice already and gone to full profit target. So again, you guys know the rule. I mean, here's one, right? Arguably 1, 2. I guess I could drop it to a 30. Whoops, not 45. You could say arguably that's 1 or 2 hits. That's definitely one. That's hit number 3, and it left. Now we're at number 4, so we don't expect this zone to hold. So we're not really doing much with it. There's a little bit of room to the top side, but it hasn't quite formed a new level of basing for us to find the long. I do think it's a decent long. There's not really sellers coming in until probably that level. Again, there was a nice little base and then kind of punched the downside. The problem I have with this one is, could we establish a new, where is it? I lost it. There it is. Could we establish a new level of basing right here? Yeah, potentially. But the question is that going to be enough room, and does it coincide, and is it really kind of worth the risk in there? We can make a 1 to 3, but it's only 16 pips. So it's kind of like, is there enough room? Not really. So it's there. I kind of wait. I would say on this one, wait for an extreme. I think 93.85 is really the next extreme level. Downside, again, we've hit 3 times. We need to wait for it to go a bit lower. So we got some more room to run. And then dollar yen, I'd say dollar yen, be careful. This is a daily zone that we have here. Again, the higher the time frame, the better it is. We got a little room to run. We got about 40 pips to go on that one. But I would say that the dollar yen is getting to a position where you're starting to kind of roll it over and start to look for shorts. So not quite there yet, but we're getting close. All right, we're starting to get close. Do I love any of the levels in here? No, not really. Not really. Hold on, let me pull something else up real quick. I don't think I have anything over here. Just wanted to double check. No, this is the only kind of short-term entry that I have also. Right, and again, that could be a potential target for a short. Let's see, it's about 46 pips away, so I guess it's not horrible. I guess this one really needs to be stretched out like that. Again, shrink that down. Actually, I'd probably do it this way. Either one of these would work. That's the red there. It's probably fine. Is right there. Okay. Now, also on this one, so I'll get a lot of questions about this one too. This is a big run up for the FIB people out there. I guess you could say your FIBs look like they're going to become, you can see right there, it's at the 23. So had I drawn it off the original one, I draw on that original one there, right at the 23. I would say this one at the 50 is probably decent too. There was actually a bit of a gap down there, right at the 50. I should probably leave that one on for later. Mark that one as well, because that'll come in. If we start to turn and roll back down again, that 112.31 would be a pretty interesting one. But again, as far as pullbacks go, everybody knows you're supposed to buy on the pullback. This pullback, again, based off the new draw, obviously, being the 23.6, there will be people looking for that one as an actual target. You know how it is. Fun with fibs. Keep telling Todd we're gonna have to do like a radio show on Fridays, like Friday fibs or something like that. I see all the Bitcoins are, all the cryptos are red. That must mean the gold is up, yes. All right, so let's go to oil. So oil, Not really much we can say about oil right now. Again, remember, tomorrow is not the day. I made that mistake earlier. Again, Columbus Day, lack of sleep. Oil inventory this week is on Thursday. Again, look for the API report, kind of get an idea. Remember, the last 2 weeks we've had a surplus. I know that the world is ending. We're up at 80 right now. It's not up to 83, but again, suppose we're running out of oil, but yet we got surplus in all the tanks right now. Yeah. So there's that. Right now it's up 0.12, not really much of a mover. It's basically where it started the European session at. I'd look to see some more movement in the overnight. If you guys are looking at kind of levels where you could potentially see some reversals or things, I would say there's a decent level up top here, right? If we turn this one red, maybe it's a little bit dark. Let me turn it to there. There we go. A decent form level. I like how it, I like the top on that one. If you guys are looking for a short in the overnight, that would be 81.86. Buying side, there's a level here, but it's been hit 3 times. The next decent base is going to be down here. And that level, whoops, whoa, not that one. Whoa, not going there. We've been down here at 78.28, right? Yeah, that's probably it. Like I said, I don't really have a whole lot. Anybody that was in this one obviously whips Ollie back and forth. So I'll look to see where it subsides. Gold, obviously, we mentioned is up, but is it really up? Not really. Non-farm payroll, we mentioned this before. Price spiked up and then halted in one position. Again, non-farm, you guys should have been able to grab that one. We could probably, I guess we could just move this and adjust it. I don't like the top that much. Let's go down to 15. Can I make it a little smaller? Yeah, that's better. All right, there we go. Let's go back up to 30. All right, so the issue I have with this one is it's just so much sideways movement. Look at this. It's crazy. Now, what's interesting about this, and that's why I mentioned, oh, I was like, gold must be up. So you're seeing that the indices are kind of red, right? You're seeing the cryptos are all red, right? But yet you're looking at gold. It used to be that gold indices and bonds, right? TLT, you would always see like TLT, like bonds would be up when the stock market was down. Why? People take the money out of risk and put it in more secured assets, right? Gold is a hedge for inflation when things are too good, right? To kind of halt the the destruction of wealth when everything is red. It's funny that crypto is now. It seems like Bitcoin is like the counterplay for gold. When these are red, this one is always green. Right, but I would say right now there's not really a true trend on this one. I do have a price level mark because we had this really nice pop, this base, this pop off of 1724. And again, I'll carry that across so you guys can see it. Where 1724 is, there's a heck of a racetrack here. So if price, and again, if I wanted to make it a little bit better, actually, I guess now that I have a little bit more of a stabilization, let's put it here. A break of 1744.80. Look for price to come back down to 17. We'll change that black for a target. 1725. So, but again, we got a lot of clear, right? And again, here's what we got for the next couple of days. Obviously, CPI is going to be big. Bond auction is coming in, but CPI is going to be big inflation. FOMC is going to be inflation based. PPI is inflation based, and retail sales should also give us somewhat of an idea of what inflation looks like. So, a lot of things on the gold front. I would say 1777, 1725, 1744 are all important areas to mark off. I do think this should be much higher than it actually is, but right now the market is very leery about gold. And remember, silver. Yeah, look at silver. Right there is your non-farm news. Ran into a level of 23, and then again proceeded to roll back down again. But we're in the exact same spot. Silver is down 0.07. Every day that ticks by, those Reddit traders that said silver would be at 100 by the end of the year is getting less and less likely. By the end of this month, it's supposed to be at like $50. If we do $25 a month, we could actually make it. But I don't know that there's any catalyst in the world at this point that is going to drive. I don't know. Maybe the miners say that, oh my God, all the silver amounts ran out. We're out of silver. I don't know. Maybe that's what it takes. But right now, it's just a tradable market. Something you want to look at? Not really. There's better opportunity out there for you guys. And then last but not least, natural gas. You can see natural gas finally broke through this level down here at 538. And again, should it have? Sure. I mean, it hit here, front run, hit, break. You expected it to break. You didn't expect it to hold. I'd say the next level of sellers up top is if we can pop back up again. Hopefully that's not the case. But again, if we do get back up, remember the natural gas inventory report will also be Thursday at 10:30. That's why that's why oil is moved a bit further. Okay. And then also check out these bonds. Not that we're really trading bonds over here, but bonds is just off to the races today. So yeah, very, very interesting day. And again, as this one is kind of leveling out, we're seeing things, you're starting to see some green start to perk back up again, and you're starting to see some red emerge over here. And again, what is the dollar index doing? Dollar index is starting to get some more strength. So wonder if there's some headlines and things. Wonder if she said something else. Let me see. Bostic said the Fed is going to be comfortable with a bit more volatility and inflation. I mean, I guess admitting that there is volatility in the inflation is better than saying that it's transitory. We know that it's here. Don't worry about it, right? I see little evidence that present inflation is causing the kind of economic damage that would bring the Fed's policy position into question. So see, like even the Fed is like, nah, we're okay with everybody spending more money for things. And meanwhile, China's like, yeah, we're not happy with the energy inflation. So I don't know. Yeah, so that's probably why we're seeing the gold move. So, all right. Well, with that being said, guys and girls, make sure you mark off your chart for your calendars for next week, Thursday, October 19th at 12. We'll be back. Hopefully, I have a bit more energy and it can be a little bit more entertainment. I apologize. I'm just fueled on coffee right now. And yeah, welcome to the first week of a new baby. So thank you guys, everyone, so much for being there. And again, I'm doing my best. I wasn't able to do it today because the baby was up all night last night, but hopefully Todd did a good job today. I'm sure that he did. But I will try to be joining him tomorrow and the rest of the week. And then again, next week, my plan is to resume my normal sessions for everything. So with that said, you guys have a great trading day and get some good trades this week. Watch yourself on risk, and I'll catch you later. Take care.